Welcome back to the channel, guys. As I've promised you a video analysis on Nasdaq. Let me just get this out of the way. Make sure that we're recording. Okay, we are good to go. Yeah, guys, I've promised you a video analysis of Nasdaq. So here we go. Let's get to it. So the first thing you want to do when you analyze is you want to analyze on a higher time frame. Higher time frames are more accurate than smaller time frames. And then now the second thing that we want to do is we want to switch from a candlestick chart to a light chart. This enables us to switch off, eliminate all of the noise in the market. The market normally has stop hands or wicks or whatever you may call it. I mean, people call these things all sorts of names. So when we are here, the first thing that we want to find out, we want to find key reversal points. How do you find key reversal points? These are areas that the market normally changes direction from. So as you can see, when the price was coming down here, changed direction, it pushed all the way up to there. So you can see this is an important area or a zone. So for me to identify more, I can see that whenever the price comes somewhere around these areas, it normally rejects. You can see here as well, when the price was coming down, we got a rejection and then we went back up. So here's another area there. You can see this is where the price exhausted when it was pushing all the way up, and then it went down to grab momentum and then went up. And then when it was above, it was failing to go below. As you can see that this is how you find those key reversal points or key zones. So I am seeing another zone here. You can see that whenever the price comes here, you had the price here failing to go lower, same thing here, and then here it was okay, it went up, then it couldn't go lower, and then as soon as it went below, you can see it came back to retest, it couldn't go higher. Same thing here, we went above, we sort of failed, came back down, and then went back up. So that's how you find those key zones. You can see we have another zone here where the price normally changes direction. You see the changing direction and all that. So that's how you find those areas. And then you want to go back to your candlestick chart. When we go back to the candlestick chart, we look for the price to go to these areas, and then we expect the price to reverse from that area. Does it make sense? Let me just remove this area here, put it as a zone like that, because I don't think it's a major zone like this zone in there. So now, judging from this, we can see that currently the price is pushing up. It has broken this area, it didn't even come back to retest it, and then it has broken this area as well. So we know that we have a lot of momentum going up. So what does this tell us? This tells us that what is more likely to happen is that the price will come down here to this zone, and then possibilities are it will reject and go back up to that zone, right? So should the price go down, how are we gonna see that? Price is gonna go down, it won't stop there, and then after breaking from that zone, it will go back to that zone and then retest it, fail to go above, and then we're gonna move down. That's how the whole price movement, price action, if you want to call it, that's how it happens. You can see here, let me give you an example. You see that price went up, it came back to this level, it couldn't break that level, it went up to grab more momentum, then it had the momentum to go there, and then it came back to this area here, and then it couldn't go back up. So this was our key entry to tell us price is more likely to go back down, hence I took this trade. I think I bagged about 1,400 pips. Let me just check. Okay, 1,500. Yeah, that was 1,500 pip move. So that's how simple you get these trades. So if I can give you a bit of a homework to do, go and familiarize yourself with what we call forex patterns. We have a number of patterns. We have continuation patterns and we have reversal patterns. If I can just give you a quick example of these patterns, we have a reversal pattern that is called a double top. It looks like this. It looks like an M. Actually, it looks like that. It's called a double top. We also have a double bottom. It's just an opposite of a double top. So in this market, the market is selling, we're going down. On this market, the market is bullish, we're going up. We also have what we call a head and shoulder. That will be a shoulder. Then what the price will do, it will sell beyond the previous point, that one where it sold off to, and then we will see the market breaking back into the structure, and then we will still see the market come back to the very same level or similar level from where it stopped, and then it will continue going back up. Sometimes it comes back and retests, and then the market goes off like that. This will be our key resistant reversal points, like these ones. So if you see markets doing that, you must know this is bullish. So this is called an inverse head and shoulder. We also have a normal head and shoulder where the price gives us a shoulder, and then the head, it gives us another shoulder, and then we know retest, and then we are gonna sell. This will be that key reversal point. Let me just highlight it for you there. You see, like that, like this. So this is the opposite of this. So this is in a market that is going down, in a bearish market. This is in a bullish market that's going up. So as you can see, this was a reversal pattern. So as soon as price broke through this key reversal point and came back to retest, that's where we knew that we are going down. So now we do have a bit of a reversal pattern here, which is an M there, as you can see. I hope you can see it. Let me just mark it there with mark the neckline. So what I can expect now is that, let me go down to the smaller time frame. Judging from what we are having here, we can see we have a lot of momentum going down. So if the price comes here and doesn't stop, it breaks this area, comes maybe somewhere there, goes somewhere there, it should come back and retest this area and fail to go above it. Then we are going to enter this market and go down with it to the next area there. You get it? So should the market go up, it should fail to go below that point. It should go back up like that. And should it go beyond this point, we know that we are most likely going back to this other reversal point. So that's how you find your direction in the market, guys. I hope you will catch this trade. Let me break it down for you one more time. Should the price come here, fail to do that, maybe it will come back here and then go down, if it's going down, right? That's the first scenario. One thing about forex, you must always have a number of scenarios because a lot of things can happen. So that is the first scenario. Second scenario is that it will break, it won't stop there, come back and retest and then continue going, right? So those are our selling scenarios. For buying scenarios, we want to see the price failing this area. So because currently the price is going down, we want to see the price test this area twice, at least a minimum of 2 times. And then in that, it will be giving us a reversal pattern, which is a double bottom to go up, ladies and gentlemen. So those are the scenarios that you will take, whether it's going to be a buy or a sell. So thanks a lot, ladies and gentlemen. I hope you catch the trade. Bye.